and welcome to BloxLiveTV. Today is Thursday, March the 14th. We're now live with the latest in the crypto world. It's 10:30 a.m. in New York City, 2:30 p.m. in London, 11:30 p.m. in Tokyo, and 3:30 p.m. here in Malta. While the total market capitalization has continued showing signs of stability as it hovered over the $134 billion mark during most of the 24 hours past. Now we can see a similar picture here on the 15-minute chart of the cryptocurrency index CCI 30. The index is up by approximately 3.5% so far in March, and it's 7% in the green year to date. The 30-day Bitcoin volatility index is virtually unchanged as it stood close to the 2.6% mark for the fourth day in a row. The 24-hour traded volume indicator is following the overall market trend of stability, and it currently stands at nearly $30 billion. We have seen signs of an altcoin season in the recent days, and this has pushed the Bitcoin dominance indicator lower as it appears to be on its way towards 51%. The top 5 digital assets show a mixed picture. Bitcoin has stayed close to the $3,900 price range during most of March, and it's once again settled just slightly north of the support line. The altcoin king Ether has been trending lower during the recent week, and it's traded around the $133 level during the past 24 hours. The past week has been volatile for XRP. The altcoin jumped yesterday, but it has since been trending lower towards the 31-cent mark. Litecoin has settled down at approximately $56 after gaining more than 30% over the past 30 days. EOS has been hovering over the $3.60 support level during most of the past 24 hours. The Coin 360 heat map shows that a majority of the assets are in the red, but most of the declines are not significant. According to the token spread website, the XMO exchange has once again posted the biggest buy and sell side difference of close to 0.3%. The XMO and BitMEX exchanges have the biggest intermarket spread of close to 2.6%. For now, let's take a quick look at some of the characteristics of Bitcoin Diamond. This late 2017 fork of the Crypto King was created to increase transaction speeds and lower their costs. Along with the increased block size, the project also looked to make mining ASIC resistant. The team also decided to make the coin more affordable by doing a split of 1 to 10 by increasing the total supply to 210 million coins. The price of Bitcoin Diamond surged above the $85 mark shortly after the split. The value of the altcoin has since suffered hefty losses, and it's been trading south of the $1 level for most of this year. Well, we'll now review the performance of the cryptocurrency asset classes. So we use data from the Messari website, which groups cryptocurrencies into 5 major categories. The infrastructure group is in the red with average losses of slightly over 1.5%. Ontology is one of the top drivers in this category with a gain of 2.5%, while Cardano posts a decline of 2.4%. The media and entertainment category is also approximately 1.5% in the red. This is in spite gains from cryptos such as Funfair with 11% and LBRY credits with just over 8.5%. The financial sector shows the biggest decline of 2.2%. Komodo is one of the top losses in this group with nearly 10% in the red. Bytom has helped the group with a 3.3% price increase. The cryptocurrency category is basically flat, although Stellar Lumens shows a gain of just over 7.5% and Bitcoin Cash of 2.3%. One of the top decliners here is Grin with a loss of 6.5%. And lastly, the services section, which also remains mostly flat with 0.2% decline. Wax is one of the top performers in the group with a gain of more than 20%. Ravain token is down by 8.2%, and Engine Coin, which recently saw major gains, is now down by just over 7%. Well, this is where the 5 major cryptocurrency categories stand so far on this Thursday. In this final segment of the market update, we'll focus on the top gainers and biggest decliners among the coin market cap front page assets. A total of 3 cryptocurrencies have surged by double digits today. The bullish performance continues for the Worldwide Asset Exchange token, and it's gained more than 50% over the past 7 days. We had a look at some of the characteristics of Bitcoin Diamond Coin earlier in the show. Like we pointed out, it's been trading south of the $1 mark throughout the year, but it spiked above this level briefly today. The Electroneum coin will commence trading on Huobi exchange today. The altcoin has surged on the announcement and is up by 20% over the past 24 hours, and the daily traded volume surpassed the $1 million mark. The PIVX coin has gained 9%, and it seems to be on its way towards the $1 price level. The volatile repo token posts an increase of nearly 9% on a low daily traded volume of under 70,000 US. Now, there are a couple of double-digit drops today as well. Rivain token spiked above the 20-cent mark earlier in the week, but a correction has followed and the digital asset is down by 14% over the past 24 hours. The review platform recently introduced a new feature, as it now allows commenting on reviews left by users. The Z coin surged on being integrated in the Polis Pay app, but most of the gains have dwindled away and the altcoin is on its way towards the $6 mark. The Komodo coin hit the $1.50 level on sharp increase on Wednesday. It's down by nearly 10% today to trade at less than $1. And the Engine coin was bullish last week, but it has recently been in a retreat mode. A daily decline of close to 7% puts the price at less than 17 cents. After a massive 1,000% increase in less than a month, the volatile ABBC coin has now extended its recent decline, and it stands at 6.5% in the red. Well, these were the top 24-hour moves during the European morning trading session on this Thursday. We'll now join our experts, Jason Fernandez, COO and co-founder of A Token, and Kevin Mirko, CEO of CoinMetro Crypto Exchange. Kevin, Jason, thank you so much for joining us on the line today.
Thanks, Jessica.
Thank you, Jessica. Nice to be here.
Great to have you both back on the line. So, Kevin, we'll start with you because markets are flat once again. Now, this is both in terms of the overall price movement and also trading activity, which we have seen. Does this tell us that investors and traders are broadly waiting on the sidelines for indicators of where the next move could be?
It could be telling us that. I think when you have to remember, and I say this a lot on the show, in that we're in a very segmented market, right? So we don't see normal correlation like you would, or let's say we don't see heightened correlation between outside influences and what happens in this market. We see more of a hype-driven market. So I would say that what you see day to day shouldn't really affect how you trade this market. You should look more at a wider range of data than just what happens day to day and maybe what the market cap is today and what the market cap is tomorrow. But looking from the outside in, I would say that, yes, it could simply mean that we've seen a lot of volatility, especially in altcoins over the last 2 weeks or so, where Bitcoin has kind of found a rather tight range where it's been trading over the last 2 weeks. Some of these altcoins have seen impressive moves to the upside and to the downside. So I think what we're probably seeing, there has been a lot of correlation historically between Bitcoin and altcoins. So usually when one moves in one direction, the other one tends to move in that direction. Now we've started to see a little bit of uncorrelation, let's say, between these two assets, between Bitcoin and then the much wider altcoin market. So what we've seen in the last 2 weeks is that we've seen, larger moves to both the upside and the downside in altcoins, which could mean that because when people see that happen, they start to get, let's say, they start to not trust maybe the indicators or the technical analysis or their fundamental analysis as much as they did before. So they tend to pull back to look for more information to decide, which way the market could be moving. But that's normal. When you see, large bursts to the upside, large bursts to the downside, you generally start to see people pull back and kind of reassess the market before they jump back in.
Okay, so we're saying they could potentially be waiting just to assess what's going on. Jason, what's your thoughts? Do you agree with Kevin there?
Yeah, mostly. I think there hasn't been a lot of news that would move the market as a whole in either direction, particularly for the major coins. So Bitcoin is still at 3,900 range, basically struggling to push further. And generally in these times when it's quiet, when the news is quiet, and there's no real major news, otherwise minor stories can really send altcoins soaring. So we know that Crypto.com CRO surged 200% last week in 2 days. Gressel coin jumped up 150%. Engine coin was doing really well for a while. So as Kevin pointed out, a lot of the altcoins are showing a lot of gains and then a lot of losses. So there's a lot of volatility there, but we don't really see a lot of volatility on the whole because of Bitcoin dominance and the fact that Bitcoin is not really moving that much. So.
And you're right, it's definitely an interesting time. And I think what's really interesting, and Jason, we'll stick with you for this, we have seen that during these calm markets, a lot of attention can go to separate projects that have some news to trade on. At Focus at the moment, we've got to acknowledge Stellar Lumens. It's one of those assets. The coin has gained some ground on Coinbase listing announcement. It's challenging Binance Coin for the top 7 spot by market cap. It's up by more than 40% over the past month. Is there further room to grow here in this mostly flat market? What do you think, Jason?
Yeah, I think there is always room to grow. The market is flat as a result of these coins trading mostly sideways. So some news show up that would affect it. We could then see increased trading and maybe something that will push those coins up. Stellar is interesting because its listing in Binance was relatively significant news. Ripple's XRP did not quite have the same effect because while it usually attracts a lot more trade volume, it basically failed to surge after the Coinbase announcement. And the reason that is because they already had pretty decent liquidity. Ripple basically shows up on a lot of exchanges. That's in contrast to Stellar, which even though it is one of the most popular cryptocurrencies out there, it isn't really traded on a whole bunch of exchanges, maybe a few top 6 or 7 top exchanges. So the Coinbase news for Stellar is a lot more significant than this Coinbase news for XRP. And that's why the market didn't quite react to XRP, but the market is reacting to Stellar Lumens. I think we've saw a 20% pop recently. So I think that's kind of what the differentiation between the two is.
And Kevin, what's your thought? Because Stellar Lumens is getting some extra attention now in the past month, and we have to acknowledge that. Do you think there's further room to grow in these flat markets?
Yeah, look, the flat markets are just, when we say flat market, we're talking about the market overall, right? We're looking at an indicator that looks at the market across the entire market. But obviously inside of any market, even inside of bear markets, different assets can do quite well. So there's definitely always room for growth, regardless of what the overall market looks like. And as Jason said, and I've mentioned this as well on shows in the past, is that I think, Ripple, first of all, when it comes to the crypto-centric community, not many people actually are fans of Ripple. Outside of that, however, it does have extreme amounts of volume behind it comparing to other altcoins in the market. And yeah, they already have volume. They're already listed in many different places. Getting listed on your 3rd, 5th, 10th, 15th, 20th exchange isn't really going to bring in as much hype as something like Stellar, which obviously has less volume, but is starting to make waves because they're making progress with their project and making progress with their business. So yeah, I think that at the end of the day, even though Ripple still maintains dominance when it comes to the overall market volume, the fact that Stellar is smaller gives them a benefit from when they do have this type of news because it's new to them. Whereas on the Ripple side, the news is just saturated at this point. There's been so much similar news outside of Ripple that the news is kind of priced in already. Another exchange, great. It doesn't really move the needle too much.
And I think what's interesting when we compare the two and the two Coinbase listings, so Stellar was created by one of the Ripple co-founders, Jed McCaleb. It appears to be kind of a similar project to Ripple. Are there any significant differences? Is there a need for 2 projects like this in the market? Kevin, we'll start with you.
Sure. They are similar, but they're definitely not the same, right? So off the top of my head, I would say there's probably 4 or 5 major differences, but the 2 that pop into my head, one, on the supply side, you have Ripple, which is deflationary, so transactions fees being burned, et cetera, and you have Stellar, which is inflationary. So that's a big difference between just the underlying protocol. And then really just the scope or the aim of the project. Ripple obviously was created for banks and financial institutions to solve problems of slow transaction speeds, moving money across borders, et cetera. And Stellar's main goal is to help the unbanked. So while obviously indirectly Ripple working with banks can probably end up helping the unbanked in some way, shape, or form, it's definitely not the first thing that they're worried about, where Stellar kind of goes after a completely different, let's say, subset of clients. So while they're, again, similar, I think a lot of people even think that Stellar is like a fork of Ripple, which it isn't, or which they say it isn't, at least. But yeah, I would say they're similar, just like every single payment, let's say every single blockchain that is built in order to be some type of payment gateway is similar. They're definitely not the same. And there's definitely room for both of these products because they're both aiming at completely different subsets of the market.
And that's interesting. So Jason, what's your thoughts on the 2, Stellar and XRP?
Yeah, I would agree with Kevin. I mean, while Stellar and Ripple are very similar overall, because they both focus on remittances and sort of funds transfer, both have private nodes without any mining allowed. Both rely on distributed ledger technology. Both essentially deliver almost free, basically instant transactions. It obviously makes it really good for international payments. But yeah, like Kevin mentioned, there are some philosophical differences between the two. Yes, they share a co-founder, and basically Ripple's creation was specifically meant to appeal to banks and sort of large institutions. And Stellar is kind of like the scrappy younger brother to Ripple. So when Ripple is focused on banks, like Kevin said, Stellar is basically focused on trying to figure out how to bank the unbanked, and it's sort of a more from a philosophical perspective, it's sort of a more inclusive cryptocurrency. And Ripple, as Kevin mentioned, is not really super liked by the crypto community because it's really centralized. Stellar is centralized too, but not quite as centralized as Ripple is. So there's sort of philosophical differences, and I think that creates this market based off of that.
The philanthropic younger brother of crypto. Let's move our attention over now, because the ECB was recently asked on Twitter where the central bank gets its money for quantitative easing. This is an interesting one, and Jason, we'll start with you. So their response was that as a central bank, they can create money to buy assets. Now, this response sparked a tweet storm in the thread from the crypto community. Have you seen this tweet, and what were your thoughts on this?
Yeah, so this isn't really news to me, and I think most people who follow finance are well aware that basically quantitative easing involves essentially printing money. And that's been a criticism about fiat currency for a really, really long time. And that's exactly the kind of thing that Bitcoin and crypto is supposed to be a solution for. So in contrast to the US dollar, which is basically constantly increasing, with Bitcoin, there will only ever be 21 million Bitcoins total. And also, given the amount of Bitcoin that are unaccounted for, there's actually going to be probably less than 21 million Bitcoins in circulation. So when you have something that's really finite like that, its worth is more easly calculated versus something like fiat currency, which sort of seems to increase just randomly. So I think a lot of people that use fiat currency on a regular basis aren't quite hip to exactly how this fiat currency is really comes about. And if they were, they look at Bitcoin with suspicion, but when if you were to actually tell them how regular currency works and how regular central banks create basically funds using quantitative easing, they would be pretty surprised if they were to learn that. So I think that a lot of lay people are surprised by that, but I don't think most people in finance are particularly surprised.
And Kevin, what's your thoughts on this as well? Did you see the tweet, and do you have any insights on it?
I actually didn't see the tweet, but you got to give it to these guys. I mean, they must the Federal Reserve and the Fed Bank in general. They just really have really good branding, guys, right? Because quantitative easing, when all it really means is we're going to print more money. Quantitative easing just sounds so cool, right? Most people don't even know what it means, but they don't even ask because it just sounds so mysterious and awesome that nobody tends to ask. Same thing with like fractional reserve banking, right? If most people, like to Jason's point, were to understand that banks can loan, $10 for every $1 that they have of your money on deposit. And of course, if they don't pay their debts, nothing really happens to them. But if you don't pay your debts, you lose your house, et cetera. So I think that, people, unfortunately, banking, let's say modern banking has been around since, 200, 300, 400, 500, 600 years. You could say thousands of years, really, but really modern banking the last couple hundred years. And when modern banking first started coming out, obviously there was no internet, there was no Twitter, there were no mobile phones, so people didn't communicate. People don't really know how these things work, and they don't really go back in time to figure out how they work. Nobody really researches these things. At least normal people don't, right? But because Bitcoin and crypto in general is in everybody's face, and they can actually research it, and they're more critical of Bitcoin when in actuality there's so many reasons why, let's say, a central bank structure built off of something like Bitcoin, blockchain, et cetera, would be so much more transparent and so much better in so many ways. But people just don't generally see that. So, I wouldn't be surprised. I didn't see the tweet, but I definitely wouldn't be surprised. But I know what quantitative easing is. I used to deal with it in FX all the time, right? It was a reason, every time that someone came out and talked about quantitative easing, you're ready to short, you got your finger on the button, so to speak. So I don't, again, I wasn't surprised, but at the end of the day, I think that what it shows is that people simply don't understand how the current system works, and whether they're critical or whether they like crypto assets in general, or they're critical of crypto assets, they probably should sit down and actually study how the current financial system works, because it would probably open their eyes and probably move them from one side of the fence to the other. That's for sure when it comes to crypto in general.
And that's a really interesting point, is that the questions that people could ask the crypto space, you could also ask that to the traditional financial banking system as well. So that's a really interesting point. I want to move over to Nick Patel now, because he told his 70,000 Twitter followers that he expects an altcoin bull run, but Bitcoin will remain largely unmoved. So Kevin, we'll start with you. Do you agree with this, that Bitcoin will remain largely unmoved and it is altcoin season, as an indicator the correlation between the #1 crypto and the rest of the flock are breaking? With this correlation, you briefly touched on this earlier.
Yeah, I think the correlation still, for the most part, exists. I mean, we've seen a few weeks where the correlation has started to break a bit, but you can't really glean anything from 2 weeks worth of data versus 10 years worth of data, right? So overall, I would say that I don't generally agree with that in the short term. I do think, though, you will see certain assets, obviously, like we've always seen certain assets that have been able to outpace, let's say, the general market per se. But where the liquidity lies in a market generally tends to lead the market. So Bitcoin holding 50+% of liquidity means that that's one of the major reasons for the correlation, because that's where the money flows. So until that changes, that correlation, at least to some extent, is going to exist. So, but on that same point, again, hype-driven market. So when people are starting to realize this, and projects and businesses are starting to realize this, so they're pushing more hype. So the PR cycles are starting to get more intense. And as PR cycles get more intense, as there's more news released, as people are talking about mergers and acquisitions and let's say partnerships, et cetera, et cetera, et cetera, you're going to start to see certain assets definitely move outside of that correlation. But that doesn't mean overall that the correlation will break. And I do think, unfortunately, because I'd love to be in a mature market right now where there was no correlation that's based on nothing more than liquidity, but I still think we're in that space. And I think it's going to take some time before we actually move out of it.
But Kevin, has this move surprised you? Has this lack of correlation that we have seen in the past week or so, has it surprised you in any way, or not really?
No, I can't say that I would have predicted it to happen these 2 specific weeks per se. But no, because I still think the correlation exists. You can't, when you look at data, when you crunch lots of data, you can't take a market that's 10 years old and take 2 weeks of data and completely change your outlook on that market, because that obviously wouldn't be the right way to do. You could do that, but you'd probably end up losing money. And for me, I look at more macro data, and it tells me that while these 2 last weeks may be somewhat surprising, even though, like I said, I think most of this is pushed by a very small handful of assets, meaning that those assets were able to, let's say, breach the correlation because of hype, because of PR cycles, et cetera, et cetera, et cetera. So that doesn't say much. That doesn't tell me that the correlation has changed. It just tells me that these last 2 weeks have been somewhat of an anomaly, and that's it.
Okay, and now Jason, I want to turn to you, because we're talking about experts believing that even if Bitcoin does break through the $4,000, the psychological level that we do speak about, the price will sooner or later drop to $3,100 before actually making that bull run that people are anticipating. Do you agree with this assessment, and why?
So I think 3,100 is an oddly specific number. I would disagree mostly, because I don't know where one would get 3,100. I think that there's certainly shown Bitcoin has quite a bit of support at the 3,900 level. There's a lot of support at the 3,850 level, and this has been going on for like several weeks now. So I'm not quite sure how you would get to 4,000 and then get back to 3,100, other than just as regular cycles. Of course, there's like times when Bitcoin is going to go down, and we may not have seen in general the bottom of Bitcoin, but saying that it's going to happen anytime in the near future, to me, sounds like not quite a prediction that's based in fact. I mean, if you look at, you mentioned Nick Patel in his tweet. I mean, what Nick Patel is basically describing is what's happening right now. I mean, we're looking at Bitcoin remaining unmoved mostly, and you're seeing a lot of altcoins have, a bull run, and then it's every now and then you have a particular altcoin that has its time in the sun, and then another one comes along. So that's not quite a prediction so much as like a description of the current marketplace. And same thing with with sort of the other expert is talking about 3,100. I think look, if we break 4,000, that would be great. It could go up. There could be news that brought it down a little bit, but I don't think 3,100 is anywhere near some sort of legitimate place. And I think also you see all these other altcoins like Polish Dash, CRO, etc. that are doing really, really well. And I think to some extent they're doing really well at the expense of Bitcoin, because what you're going to have is traders essentially taking profits off the table and essentially reinvesting those into these other cryptocurrencies that are sort of growing faster. Then they might move the money back. So I think it's sort of there's a lot of just moving money around in the market from one cryptocurrency to another, and that's kind of what trading is all about. But yeah, I think 3,100 in the near future is really unlikely.
Okay, well, fantastic. Thank you so much, Jason and Kevin, for joining us on the line. Always a pleasure to have you here on the live show. Thank you so much for your time today.
Thank you.
Sure,
Jessica.
thanks.
Thank you. Now, before we sign off, I do have a last-minute update from our editorial staff regarding the crypto market. Now, the total market capitalization still trends sideways and above the $134 billion mark. Trading activity has slowed down since the European morning hours, and the 24-hour volume has slipped below the $28 billion level for the first time in more than a week. A majority of the large caps are trading sideways, but Stellar Lumens is the top performer among them. The altcoin has currently taken the 7th spot by total market capitalization to push Binance Coin down to 8th position. Well, this wraps up this Thursday's Crypto Now live show. We thank Jason Fernandez and Kevin Mirko for their expert analysis, and we thank you, the audience, for joining us, and invite you all to accompany us every weekday at the same time.